Hi there, I'm Mike Larson with the MoneyShow MoneyMasters Podcast, and I'm coming to you from the Money Show in Las Vegas. I'm here with Gav Blaxberg, CEO of Wolf Financial. They used to call James Brown the hardest working man in show business. I feel like you're the hardest working man in FinTwit and just about everything else when it comes to market education. Talk about that a little bit. I mean, how did you come to found Wolf Financial, and what are you up to now?
I appreciate that. I like to think that consistency is what creates exceptionality. And so for me, this started because about 4 or 5 years ago, I was actually close to graduating college as a finance student, and I realized that they hadn't taught us anything. We didn't actually know how to evaluate stocks. We didn't know how to invest. All they taught us was, geometry. And so I was like, all right, we got to do something about this. So I set out, and the idea was I'm going to create an app. In the app, I'm going to teach people all the things that I wish I knew about finance and investing and ratios, and I was even a little bit ahead of our time with some of the AI stuff.
Yeah.
And as I was building that out, I was like, okay, well, got the app building. Now we need users. How am I going to get the users? I'm going to get them off Twitter, where all the finance people are. So I go to Twitter and I start building an audience there, and I get a little bit lucky, hard work, and I become the first person really using Spaces on X, and I connect with the Spaces team. I get deeper into the product. I'm building this audience, simultaneously building this app. Things are getting really, really good on the social media side to the point where we're like, why are we pursuing something else here? So I ended up splitting into two companies. Kind of the rest of the team went out, started building more like software type items, and I was like, I just think I'm going to do good on social media.
Yeah.
And so I took a contract, actually a 3-month contract gig with Twitter to help them build the product. Surged during that time, tens of thousands of followers. And then I spun out, got my first client within a week, and it's like, okay, there's something here, and I just started hosting 40 hours a week. Now, it's come a long way. At that point, it was just me. I was hosting 40 hours a week at my mom's house, just building up the company. Wasn't making money for 17 months until that point. Now, there's over 10 people full-time employed. We have 100 hours of Spaces a week across finance, crypto, and sports. We manage 50 of the largest finance and crypto social media content creators in the world. We do about 5 billion impressions a month across our network, and it just continues to scale. So now we've introduced video podcasts we've added. We have a Wolf Solutions brand, Wolf Productions, so it's all coming together.
It's amazing to me because I think about the way I learned. I mean, I'm 49, I don't mind saying it on air, how I learned about investing. A lot of it came from my own father, actually. He's been investing for decades, versus the way today's investor learns. Talk about that a little bit. I mean, when you're communicating with your investors, how different is it and why? Well,
it's funny you should say fathers, because I actually got really into investing because of the poor investing decisions that my father made.
Yeah.
So I was like, okay, I see how not to do it. Let me figure out how to do it. And sometimes that's what you need. I think that it is very different nowadays for a couple of reasons. One, it's never been easier to get access to information, right? When you go back, even 10, 15 years ago, most people weren't on the internet every second of the day. There wasn't a ton of apps that were like a StockHoots, right, where it's just like all these people talking about the market all day. FinTwit didn't exist. So you had to get the news other ways, whether it was through Wall Street Journal or in print or things like that. And because of the way that people absorb the information, I think they invest differently, right? Because ultimately, especially for traders, which I think there's a lot of traders here, you want to get an edge. That's the number one thing, is you want to create some type of edge. And as the flow of information becomes more free and constant, it becomes harder to get an edge. And so you now have to figure out different ways. And I actually had a good interview with Tom Brody, and he explained you have to play a different game as retail. You have to understand what your advantages are versus institutions. And so I think that's why people invest differently nowadays.
Yeah, let's talk about that. So what does the retail trader, investor have that, what are some of those advantages, and what are the things they can do to kind of get ahead?
For sure. So you have less limitations, as in you don't have to disclose your holdings quarterly, right? You don't have any shareholders that you have to abide to. You can choose your own risk parameters, right? You don't have anyone else that you're looking over your shoulder. You can play in small and mid caps, where a lot of institutions can't even touch. You could build your portfolio however you like, is kind of the beauty as a retail investor. And it's also the downside. I'm forgetting who says it, but someone said recently it's never been easier to be invested, but it's never been harder to stay invested. So I think that those are some of the pieces that you have to understand as a retail investor. But the really cool thing is nowadays, people like myself are trying to also just bring you all the best. So on my Spaces, you have people like you who are jumping on constantly. There's this one guy, goes by Jaguar Analytics on my Spaces, popular speaker. Jaguar, I take a lot of insights from. He came on my Space the other day, he was talking about a company, AUR. And he said, small cap company, they're working on self-driving for trucking. And I never heard of this company. Sits up there, makes the case. And then the thing that stands out, he goes, they just got approved to go from testing to commercial. I was like, that sounds big. So I go and I put a starter position in the stock. I'm up 30% in one day, right? Like literally this thing's moving. So I think as a retail investor, you have the opportunity to go and listen in and absorb and take so many different ideas and have the ability to think for yourself.
Yep. Let me ask you this: how do you separate the good information from the bad, the people who know what they're talking about, and those who don't? How does that process play out?
Yeah, it can be a little bit difficult. Obviously, the number one thing is going to be experience and length, right? And Jay Woods was saying this when I talked to him earlier, that Stanley Druckenmiller is not a legend because he had 1 year that he made a ton of money. Yeah. He's a legend because he did it for 30 years, right? And so it's the consistency over time. So I think you want to look back, and that's why I'm so young in this area, but I'm lucky with social media that it's a newer thing, and so me having done 5 years makes me a veteran.
Yep.
But you definitely want to look for people with like proven track records, and that's why Warren Buffett, right, is someone that people are going to always look to. He's done it for so long. And absorb from that. But on the other side, you can kind of track yourself. So when a lot of people are in my spaces and I really want to see if they're good or not, to be honest, I just listen every day and I write down their ideas, and then I go ahead and I add them to a watch list, and I set alerts, and I say, okay, like, you tell me, let the market tell me if this person knows what they're talking about. And I've been doing it for years now, right? And so I can build my own views of people's track records that aren't even public.
Fair enough. Let me ask you this. We had an enormous wave of people come in COVID, stimmy money. Okay, what am I going to do? I'm sitting in my house, I'm trading stocks, I got nothing else to do. As that's faded out, how do you see things now? Like, you've obviously built a business off of these people still being involved, still being active in the markets. How have things changed, and where do you see that going?
It's a very different crowd than it was, but in some ways it's the same. People are still trading. They just went from GME to Trump coin, right? They went from AMC to, I guess maybe some of them have moved on and now they're doing like Palantir, right? And so they're moving into different names. There's still a lot of money to go in the market, mostly probably because we've been on a 2-year massive bull run. And so that's just created everything that you bought pretty much for the most part in the last couple of years has gone up over time. And so there's a lot of liquidity in the market. That's the number one thing that you need to have these rapid moves and volatility. And so I actually think there's a lot of similarities to what's been happening beforehand. And just like all those people, the number one thing that they flocked to was a community of other investors that they could band together with to do research in area items like that. You find it happening now. I think the number one thing that's happened is people have gotten a little smarter. So a great example, I don't know if you know Amit's Investing.
Okay,
very popular account, kind of a cult following. He built this brand around Robinhood, Palantir. He's another stock, Grab, now that he's talking about a lot. And what he did is he almost got people, he's almost like Roaring Kitty. He almost got people like so entrenched in these concepts and ideas to buy in, but they're actually like quality companies with like strong futures, and he's building out the fundamentals and he's bringing people from the companies on. And so we've kind of taken this like group of people that was like, okay, we understand that we can all bound together and create something great. And now let's do it on a quality stock. And so I just hope it keeps moving in that direction.
All right. Anything that really interests you personally in this market right now? I mean, I think earlier this event, we were talking about AI and tech and some of the things going on there. I mean, when it comes to designing your own portfolio, what are you looking for?
So I'm still really, really big on the AI theme. I just don't think that we're done. And my theory, and we talked about this a little bit before, anything that can save the most valuable commodity in the world, which is time, is going to have value long term. And AI is just changing our lives, and most people I know still don't use it. I use AI almost every single day. I go in and ask my questions to ChatGPT. I put contracts into ChatGPT. I ask it to read through things, or Grok, or whatever it is, right? I've got probably 4 or 5 downloaded on my phone just to play around with. So I think that there's a huge runway there. I don't think that it's mass used. I think it should be mass used, but we're not there yet. So there's a lot of time. Outside of that, I do see a lot of areas of interest. So one of the names that feeds off AI is Tesla. For me, so my portfolio is broken up in a couple of different ways. Majority of my money, to be quite honest, is in that long-term, broad-based ETFs. Let's ride the market. Let's bet on the U.S. Then probably about 25 to 30% is more where I am finding opportunities that I see, and I'm swing trading around them typically. And so for me, like, I look at Tesla, and I've been bullish on Tesla since 2018. I just have so much confidence in what that company can become, where the lines of revenue are going to come from. So that's a big position for me. I look at crypto, and I do hold probably at least 20-ish%, 10 to 20% of my portfolio across, but not just Bitcoin, like a lot of different opportunities across the crypto schematic, a lot of Solana, because that's a massive trading platform for people. So I think I like to follow smart money, big money, which sometimes coincide, not always, and also just trying to think about what the catch-up trade is, right, as well, and like, where is there other areas? So like for me, like when Bitcoin surged and Ethereum hadn't surged, I bought a bunch of Ethereum at 2,500, it surged like 3,600, that was the catch-up trade for me there.
Got it.
Different pieces like that.
Okay. When it comes to what you're talking about here, it's helping build a more confident investor, essentially. Talk about that concept. How does that work, and what kind of message are you going to be sharing?
It's basically what you're doing in your everyday life, and my thought process behind the presentation is there's so many people that I talk to that, every investor, every trader has their stories. Oh, I got stopped out of this one, or oh my gosh, this was the worst loss for me ever because I couldn't get out of it. And I think what's often missing in these areas is the confidence, right? The confidence to either get in, get out, whatever it is, but people lack confidence in their, especially investments, to be honest. Trades are a little bit different, but long-term investments, the ability for someone to compound and be up 1,000% on NVIDIA is very difficult. It takes a commitment to confidence. And so what I'm walking through there is like, okay, well, how is confidence built? It's not just me looking at NVIDIA and saying, oh, cool company, stock went up, right? It's the hours of digging in and building an understanding. It's actually changing the chemistry within your brain and rewriting the lines of code in your head by feeding in new information. But you can't just do it once. You have to continuously do it. And so what I really compare it to, I'm going to make a lot of comparisons in my speech to social media and building on social media. And I think I mentioned this briefly on our space, how, listen, if you come and post once a week on social media or once a month, it's not going to work. It's not going to like you and not going to respond to you. But if you're there every day, the algo is like, well, this makes sense, right? And the algo feeds back to you. If you do your research every day and you stay in the picture and you stay persistent, you can stay confident. Another area, to be honest, it's like, I think the simplest thing people understand it is like working out, right? If I go to the gym one day, not going to be ripped. If I go to the gym for a year, probably going to get there. Same thing with investing, right? If I go for a day, and that doesn't mean you're tinkering with your investment each day, or you have to open up your brokerage, but you're staying in the know and doing your research. So there's a scientific process to it. You can choose to follow it or not, but it's like, Tony Robbins, right? He's like one of the most famous coaches, charges 7 figures for his advising. He has this big famous thing where he's like, listen, I'll tell you everyone, the first thing I tell everyone that pays me 7 figures, and I'll tell everyone for free, get in shape. And then he walks them through, he's like, why? Because it makes you create routines and habits. And I think the same thing for investing. Get your mind in shape by creating routines and habits. Read that Wall Street Journal article every morning. Watch the Money Show every night, those types of pieces.
Gav, I really appreciate you taking some time out to talk here. You're a busy man. Best of luck with what you're doing with Wolf and some of these other ventures.
Thank you so much. I appreciate you having me out here. This is a really cool opportunity for someone like myself, right? There's some guys here that have been doing this for 20, 30 years. But I'm newer to the scene. I've been doing conferences for 3, 4 years. And now I'm getting the opportunity to interview people like yourself, get interviewed, come here, speak on stage. So I appreciate you giving me the opportunity.
Awesome. Cheers, Gav.
Thank you.